Is trading just another form of betting? It is a question many people ask quietly, but almost nobody admits out loud. Because if it is betting, then each time we click buy or sell, we are not doing something calculated or professional. We are simply hoping that luck chooses our side, and that feels uncomfortable. For a long time, the financial world has carried a mysterious aura. Floors filled with screens, numbers changing in real time, people speaking a language that sounds almost coded. Outsiders imagine secrets being whispered behind expensive doors. Insiders swear that everything is rational and measurable. Yet every chart still moves like something alive and unpredictable. No matter how many strategies are shared or promised, nobody sees the future with certainty. And that adds weight to the idea that maybe trading and betting exist much closer to each other than traders like to believe. Most people believe trading is the opposite of betting. They imagine professional traders as mathematicians with perfect control, people who just know when the price will go up or down. They assume that if someone is using a strategy, or a pattern, or a piece of news, then it must be skill and not luck. Many beginners think if they only learn more indicators or follow more gurus, they can remove uncertainty. The financial industry also benefits from this belief. If trading seems like a controlled science, then more people feel confident entering the market. And when more people enter, more fees are paid, more liquidity is added, and the machine keeps moving. It is tempting to think that knowledge alone eliminates risk, but knowledge does not remove uncertainty. It only helps us understand it. The real explanation is simpler and more rational. Trading can become betting, but it is not automatically betting. Betting is committing money without a measurable edge, even if it feels exciting. Trading becomes similar to betting when decisions are made emotionally, quickly, or based on hope rather than evidence. But trading becomes different when you understand that every choice carries a probability, and that your goal is not to predict perfectly, but to manage outcomes. Professional traders accept that they will be wrong often. They focus on limiting losses and letting wins grow. The edge is not prediction, the edge is discipline. A casino does not win because it guesses which player gets lucky. It wins because the rules of the game are designed to protect its capital. In a similar way, a trader who acts like a casino, not like a gambler, begins to separate themselves from betting. The mystery is not whether trading is betting. The mystery is whether the person behind the trades behaves as a gambler or behaves as the house. Understanding this changes perspective. The next time someone enters a trade, they might ask themselves, am I placing a bet for excitement? Or am I following a plan that accepts risk, but manages it with intention? Recognizing the difference is the first skill, and it costs nothing to learn except honesty with yourself. If you found this helpful, subscribe for more simple explanations about money, markets, and the forces that shape them. Thanks for watching. Simple Revenues. Finance made simple.